Welcome to today. I'm called by Digital World Academy and Crypto Queen Academy. So today I want to believe that everyone who is joining us have an idea of the topic that will be covered. So I especially welcome you. My name is Juliet and also known as Crypto Queen. So the supposed topic that we plan to cover today are today is a Forex class. Lest I forget. Today is a Forex class. Our Forex class are usually once a week. Then our crypto class are usually once a week. So the topics that we'll be covering today, that we are supposed to cover today, are base and currency, Forex market, pips and pipettes, spread, lots, leverage, margin, equity. So if you are new in this call, these are very vital, essential topic that you should know. So I want to believe that, I want to advise that as we proceed with this mentioned topic, that we pay attention to be able to understand and ask questions where necessary. So today I have what they call those who will be anchoring us, Emmanuel and Newton. So Newton is here to join us. So the topic I mentioned are the supposed topic. So, but before Newton comes on board, I would be handing over the class to Emmanuel. He will be giving us he will be sharing a brief knowledge um, in, uh, on indices. So I want to also believe that every one of us here understands too that you can't talk about Forex without talking about, metrics. So he will be taking us some metrics. So you can't talk about Forex without metrics. So just briefly, he will be taking us on that. Emmanuel, you will be having 20 minutes maximum of 20 minutes. Please don't exceed 20 minutes to just keep us busy with this metrics topic before Newton will come on board for our supposed topic today. Thank you. Please take over. Please, can you unmute yourself?
Okay. Hello, everyone. Can you hear me?
Please, we can't. I remember the last time. I don't know if you can. You were not audible the last topic.
Okay.
So I would advise you try to be audible this time around. Thank you.
Can you hear me now?
Yes, we can hear you. Thank you.
Okay. Is it very clear?
Yes,
Can you hear me?
please.
Can you hear me on the chat? Can you just type in wow so that I will see the chat? Let me show you.
We didn't hear what you said.
If you can hear me, can you just type it? Just type it on the chat box. I didn't say wow. It's just type it in the chat.
Right. Your voice is still low. We don't even hear what you asked us to type. That's why.
Okay. Can you hear me now? Sorry, I'm just having. Is it clear now?
We can hear you.
All right. So just give me an it. You can hear me. Yeah. Okay. Someone is saying yes. It is hearing me. Okay. All right. It's yeah. All right. So I'll be audible. So I want you guys to pay attention because it's very important. We look at something very important. Okay. Now let me share my screen quickly while we wait for what we have. Sure, you can see my screen, right? Okay. Can you see my screen? All right. Okay, now. We have we have what we call the matrix, okay? The matrix. So I'm sure that some of us must have heard about this somewhere or at some point. I must have heard about the matrix. Even you must have heard some people talking about the matrix or something like that. Now, I would want you to relate that to this FX trading of the thing. I want you to understand the fact that Forex is in itself is like a word on its own. Okay, so when you understand it that way, it helps you to know who and what you are dealing with. You kind of know what you are working with, so that you know how to enter and how to exit. It's very, very important. So now, what is really the matrix? Like you can see on my screen, some of you must have watched the film, but you don't have to watch the film to understand what I want to say now. Like we all know, the matrix is a system of control, right? System of control. The system that it will always seek to place perceived limitations upon you. These are systems that have been put together by those that owns it. So they put it to place limitation upon you and upon the way you see yourself and upon the world around you. So at times you hear people saying different kind of things. You hear people talking about okay, this thing is not possible. There's no, can somebody really earn something in this industry? Can somebody become something in this industry? And blah blah. So that is because of what they matter. But now we are here to understand that we can transcend those perceived illusions, right? And that we can become the best traders that we can possibly be, and also hopefully along the way can also become better versions of yourself. Yeah, because Forex is not just Forex is a fight you're having between you and yourself. So this is why it's a kind of unique industry, because you are kind of you are learning how your mind works. You are learning how your mind works. Even after you learn all the basics, all the pips, all the margin, all the leverage, or when you learn all those things, by the time you enter the real market and you place, how you know the kind of person you are is when you press the button, and then you place a trade. Then you will know the kind of person you are. You know how you respond to losses. How do you respond to losses? How do you respond to all these things when you are in massive drawdown? And maybe let's say that is the last money you have on you. How do you respond? Or someone give you funds to manage, or someone give you something to manage. How will you respond to such things? People will see, some people can just fall down when they express losses. But these things are things that when you come in contact with them, you are able to, to learn that you can transcend those perceived limitations and become the best person that you can be, right? So along the way, there are also a couple of things that we look at that we need to understand about the market. And we understand that in the market, we have Agent Smith, right? We have what? Agent Smith. All right. So if you look at the film, The Smith, you notice that he is to override the objective of the other programs. Okay. Now, what do we refer to Agent Smith here as liquidity and manipulation, right? Sorry, please. Let me quickly just give you some minutes, please. Okay. So we refer to Agent Smith as what? Liquidity and manipulation, right? So it means that manipulation is going to occur. Manipulation is bound to occur. So whenever you come into the real market, you come into the market, don't ever think that there won't be manipulation. Don't ever have it. Don't ever think like that. The market will always move in my direction. No. there must be manipulation. It is what makes the market market. Without manipulation, the market will not be existing. So there must be manipulation. It must surely occur. It's what makes the world, the market, very interesting. That is just it. And also liquidity, meaning that big institutions like banks, big fund, big money, we call them big money guys that have huge funds. Not guys actually, because Forex is not controlled by like it's a group of people like institutions and large companies that had a large fund to really move the market. So they need liquidity in large sums to move the market. It's needed to move the market. So that is why they surely will manipulate the market. Okay, so they need fast moves, and at times you will see some market moving. You see some long candlestick. Those long candlestick, you see some series of long candlestick. Those candlesticks are kind of institutional candlesticks. It's not ordinary. It came out at that point so that the market can move the market either to the upside or to the downside. That is what we call manipulation. That is what we call liquidity. It's very, very important. So you must understand that we cannot stop the manipulation. It's bound to happen. All we have to do is to be aware that it happens, and then be aware of the possible places that it is going to happen. Okay, this is where, okay, at this point, this is where it's going to happen. Okay, you are aware, and then you wait patiently for that thing to come to you, and you place your trade. That's how to to transcend all those things, to overcome such things. And then the places that it will surely appear. Like I said before, we refer to this manipulation as Agent Smith. Okay. Yes. Now the second thing we must know about the markets is that there is no spoon. Right? Is that what? There's no spoon. Yes. There's no spoon, meaning fractal. Right? The market is what? Fractal. Price repeats itself. It repeats itself over and over again. What you see on the higher time frame repeats on the smaller time frame. So what you see on the daily time frame is exactly what happens on the seconds, on the seconds time frame, 15 seconds, 1 minute time frame, even 1 second. You get? So there's nothing like a new pattern, new stock. It's repeat over again. There's no spoon. The fact that is at any time. Exactly. So this is what happened. Yes. So price, like I said before, price movement repeats itself over and over again. Okay, like there are waves within waves. The magic comes when you understand. The breakthrough comes when you understand that the market is fractal. When you understand that the market is fractal, that is where you get your breakthrough. That means you can trade any time frame. You can trade the day, you can trade daily, you can trade weekly, you can trade 5 minutes, 1 minute, 15 weeks, anytime, even seconds time frame. Some guys will call it high frequency trading. You can trade it, you can trade anytime, because you know that this thing happens over. So you will not be at up and down. You'll be at rest because you know this thing happens.
So, Emmanuel, your line is breaking. So many people are complaining that they can't hear you very clear. Can you hear me?
I can hear. Is it clear now?
Please, can you check your message, direct message also? Then many people are complaining that they can't hear you very clear, but check your message, please.
Okay, all right. Okay, no problem. Okay, that's chat. If you can hear me, type on the chat box. Okay, so the goal of everything now is to understand structure. Okay, you understand? You say I know Kung Fu, meaning that yes, you understand market structure, Fibonacci, equilibrium zones, and supply and demand zone. These are things that all the stuff that you'll be trying to learn along the line as we progress in this. And then after that, once you say that, you can become a master of your own. And then after that, you have to know how to free your mind. Once you place a trade in the market, once you place a trade, you have to free your mind. Allow the trade to play out. Allow the trade to play out. Allow what you place.
So,
allow it, give it breathing space.
So your line is still breaking.
Some guys, when they place trade, they're checking it, their heart is just up and down. They're wondering this. Once they're enjoying them, you see them accept the fact that they're enjoying, and then
we have to welcome. Can you hear me? We have to welcome new thing. Emmanuel, we have to welcome Newton to take us up for today's class. Thank you very, very much for standing by. So, Newton, we would continue this class some other time, people. So we already have a topic structured for today. So Newton, please, you may take over from here.
Okay. Good evening, everyone. Sorry I was late. I was a bit behind schedule, but I want to say thank you to Emmanuel for taking over and for stopping by. So quickly, there's no time. I would want us to kick off with what we have on the agenda tonight. So permit me to share my screen quickly.
You can share your screen.
Sure, I'm doing that. 1 second. All right, so can you guys see my screen? Please, if you can see my screen, you can just let me know in the chat box so I can kick off quickly. We are far behind schedule. Please, if you can see my screen, please type yes in the chat box, please. All right, thank you. All right, so tonight we'll be looking at, as time permits us, we'll be looking at base and currency. Quickly, we'll be looking at forex market hours. Then we'll go into PEEP, then spread, maybe lot size and leverage, if time permits us. All right, so now let's briefly talk about what base and currency actually mean. Like on my screen, you would see what is on my screen. You can see the graphical representation of what's on my screen. We have EUR and then /USD, and then you see something like quote currency, and then you see something like base currency. Now, what this represents is that this is more like an abbreviations, okay, for different countries' currency. Okay, like we have in Nigeria, we have NJN, which means Naira. So the short form for Naira is NJN. So is NUR, EUR, and then USD. Now, what is base currency and what is quote currency? Now, we want to look at the hierarchy in which this currency, are placed. Now, we're looking at the economic, how strong, okay, each of these countries' economic is, and the reasons why the currency, base currency, and the reason for the quote currency. Okay, so technically we're looking at EUR USD. Sometimes we call it Euro USD. Europe tends to have a stronger economic than the US and some of the other countries that we know, and hence their currency is actually quite high. Okay, I think yes, their currency is
We can hear you.
Forex. We're looking at currency pairs in Forex. So we have the base currency, which are the major currency, and then we have the quote currency. Okay. Now the base currency are for the currencies which are actually very, very strong. Okay. And you know, when we talk about Forex, we're talking about foreign currencies. Okay. We're talking about currencies of different countries in the world. Okay. And this currency comes in hierarchy of how strong, okay, a hierarchy of how strong the economy of a particular country is, hence the currency of that country will be very, very strong. So we have euro as a very strong currency because they have a very strong and stable economy, kind of. And also we have Great British Pounds, that's the GBP, okay. They also have a strong, in fact, they have a stronger economy, okay? Their economy is very stable, and hence they have a very strong currency, okay? And then there comes the very, very, very popular, most used currency in the world, the USD, okay? So these guys, this currency are called major currency. So you always see them before any other currency. And you know, when we talk about Forex trading, foreign exchange, we talk about exchange of two currency, buying and selling of currencies. Okay. Now, since Forex is about buying and selling of currencies, two currencies are always involved. Okay. Two currencies are always involved because you're always doing transaction between two currency. Okay. Now, so you would need, so we have the currency that always comes first as the base. Okay. You always see this currency coming first. So we have euro as a base currency, we have GBP US, we have GBP, that's Great British Pounds, as great currency, as a major currency because they always come forward. And then we have USD, and then we have AUD. Okay, so when you see major currency, these are what you always see. You see, you see euro, okay, as the first currency, which is the base, and then we have the quote currency. Okay, that's the currency you are what you're trading against or in for. Okay, then we have abbreviations like GBP USD, GBP, okay, GBP USD. Okay, then so we have several of them like that, but the common ones that we always trade, major currencies that we always trade are the euro USD, euro GBP, we have euro card, we have euro JPY. So you know, they're stronger, they are called, they're referred to as a major currency. This is very important because we're coming across several of these currency pairs. We call them currency pairs because anytime you're trading Forex, you are always involved with two currencies. Okay, you are always involved in two currencies, and with these two currencies, you always have the base currency and you have the quote currency. Okay, so that is it. Then, so looking at the category of the currency pairs, we have the major and we have the minor currency. Okay, we have the major and minor currency. So the major are what is most traded in the FX market, and that's the most of the currencies you always come across. So we have euro USD, we have euro JPY. You know, we all know what JPY. JPY is the abbreviation for Japanese yens. Okay, that's the Japan currency. Okay, so as we move along, we'll be talking about, we'll be, you know, seeing examples of these different currency pairs that we have, so you can actually take a look. But when we talk about base and currency, we're talking about the strong currency, we're talking about the major currency against the minor currency. Okay, the quote currency is referred to as the minor currency. So that these are other currencies of other countries that are not as strong as these countries, you know, that we've talked about, we've mentioned. We have the euro, we have the European countries, we have the American countries, and of course we have the Australians, you know, in that category. Okay, so that's all about base and currency, talking about the currency pairs. Now I want to move on to the Forex market hours. Okay, talking about the forex market, we have specific time or we have specific timing that is always good to come into the market if we really want to make good money. Okay, you don't just go into the market and start to look for trades. No, you want to time yourself. You want to know the currency, the timing that is actually suitable for you, and then you take advantage of that. So in this part of the world in Nigeria, we have a very, very good timing. Okay, we have a very, very good timing when the market opens and when the market closes. Now, talking about forex market hours, we have three major market hours. We have the London session, we have the New York, and then we have the Asian sessions. So the most traded time, forex time we trade in Nigeria is in London and then the New York session, because the time is actually favorable. Like for instance, the London session opens around 9 a.m. in the morning here in Nigeria, okay, and then closes by 9 p.m. While in between, the New York session opens around 3 p.m. thereabouts, and then close at that same time, 9 to 10 p.m. at night. So within that time, it's actually very, very good for us to be, we'll be awake then, and the Asian times is when we are sleeping, 1 a.m. in the night, in early in the morning till 5 a.m. and 6 a.m., which is really not convenient for us, okay? So you as a trader in Nigeria, you want to focus on this time. You want to look at from between the hours of 8, okay, to 10, within these hours. But for me, or the most even better timing is the London section and the New York section. Now, there's what we call overlapping, okay, like two sessions collapsing at a particular time, and then that gives rise to volatility. Now, if you really want to make quick money in this market, you want to time yourself. You want to, make yourself available for that timing. Okay, and what's this timing? We're looking at between the hours of 3 p.m. Okay, between the hour of 3 p.m. all right, 15. Okay, 15 p.m. or sometimes around 1 a.m. 1 p.m. within this hour, between this hour, look at this hour. This is the overlapping section. There tends to be a lot of volatility in the market between 1 p.m. and then 3 p.m. This is the time New York session is preparing to open, and then open fully. You see a lot of volatility because we are talking about, some individuals in London who are already in the market, okay, are now trading until the timing of another set of individuals in New York who are just waking up, to enter the market. So you can imagine the aggressive, volatility at that period in time. And if you're a very good trader, you position yourself, you see your take profit quickly hits, and then you can just leave the market. Okay. So as a good trader, you want to look at this overlapping, session. You can take that or use that to your advantage. Okay. So, but a very good time for traders in Nigeria, because we're in Nigeria now, so it's more important so in Nigeria, is between this London section. So we're looking at London section from 8 a.m. okay, then to perhaps 9 p.m. or 10 p.m. London and New York section. So this is about forex, market hours, which is actually very, very important. Okay, it is very, very important that you know when to bash into the market, take your money, and then leave the market for some other time. So the next thing on the agenda is we'll be looking at the PEEP, what PEEP means, and how you can take advantage of that. So you want to bear in mind that the amount of PEEP you are able to secure as a trader in market determines how much you're going to make. Okay, so you can always plan yourself. For instance, you can have in mind that you just want 20 pips from the market and you are done for the day. Now, what is a PEEP? We have several meanings to that PIP. You can say percentage increase in price, or some people say percentage interest in price. But I go by the percentage increase in price because the PIP is just the rise in market. It's either when you are in a long or in a buy position, or perhaps you're in short position. So that movement that movement price makes, maybe like price moves to the upside, move to some certain level up there, then you now count how many pip price has moved up. Okay, so pip means the unit of measurement to express the change in value between two currency. Remember, in Forex, it is a battle between two currency. You're buying and selling currency pairs. Okay, so now your target is targeting how many pip is, maybe like for instance, you intend to trade Euro USD. Euro, that's EUR/USD, that's Euro USD. So you're looking at, okay, how many pips, what is the change between the time you are in the market and between the time you spent in the market? So now the pip, that's the pip movement, that's the difference between those two currency at that point in time. Like for instance, now remember that anytime you're in the market to trade, you are looking at trading the base, that's major, the base currency as against the quote currency. Okay, now so let's assume that when you enter the market, okay, price was at 1.1265, okay, and then you now you buy, and then price moved from 1.1265 to 1.1267. You could see that the difference between these two, this 1.1265 and 1.1267 is 2. That's 2. If you subtract this from this, you have 2. So in that sense, you're saying that price has moved 2 pip in your favor. Like you let's say you bought, okay, you long, or you bought, okay, price has moved 2 pip in your favor. So 2 pip in your favor, which means you have made profit. Okay, there has been price percentage increase in price. Okay, price has moved up 2 pip. Okay, so now let's now say as a profitable trader, your target overall is like 20 pip. So which means that this guy will have to move like let's say 1.127 or thereabouts. Okay, so if you now subtract this guy from this guy, then you now have 20 pip. So which means that you've been able to meet your target. So if you are in the market, you always want to target how many pips you're able to catch, because that determines how much you would.
Are you there? I guess he was interrupted. Mute. He left. Okay. While we wait for him to join, I guess his network was interrupted. So for me, I would advise as we move on this forest journey, it will be very important that as a trader, you pick a currency and master that currency's movement. So like we will be starting our technical analysis by next week on crypto. So the same technical analysis knowledge that you learn anywhere, whether in crypto or forex, is the same technical analysis that you also use to analyze the market. So it's very expedient that you master one currency pair, just like I advise in crypto. You master one currency pair and give attention, like study it. When you master it, you study it, study the movement, how the currency moves. So study the daily, weekly, and lower time frame movement. So while you study the movement, concentrate on one or two pairs so that you won't be incurring more losses, because the more currency you trade every day, the more you expose your risk. So and Forex is naturally my area. I'm also a learner like you and I, so I'm more conversant with crypto. That's where I major on. So that's why we see most times I allow those who are familiar with Forex to mentor us. So and I don't know if we have any okay, he's back. Please, can you
Sorry,
unmute
guys.
yourself?
Yes, sorry, guys. I had a network glitch. Today is just terrible, but I'm here. So let me just quickly share my screen and then we'll continue. Sorry about that. All right, so I'm sharing my screen now.
Oh,
All right. Now, but there's something you need to pay
everyone,
attention to. Okay. Now, this is how to actually know. Can you guys see my screen now? I just shared my screen.
yes, please.
Okay, now see, there's something you need to pay attention to, especially for the newbies who don't know how to calculate your pips. Now, pips, like we said, I said pips is percentage increase in price. Okay, that's the difference between price at a particular point in time. Now, look at it. The pips, when you see quote currency pairs like this, okay, you only see your currency in quotes like this. Now, this is let me just explain what this means. Now, this means that when you see this 1.1265, okay, as against this 1.1267. Now, remember we talked about currency base and currency quotes as a base and currency. Okay, we're talking about quotes and base and currency pairs. What am I saying? We're talking about currency pairs as base and quote currency. Now, and I said you always have something like this euro. If you're trading euro, okay, euro comes first because it's a what? It's a major currency because its base is stronger, and then you have USD, or let's say other currency pairs like CAD, okay, like CAD. All right, so euros always comes first. Now this one you're seeing here represents euro, okay. This represents euro, okay, and then this other quote you're seeing represents the currency pair you are trading at that point in time. So let's say in this instance we are trading euro USD. Okay, now this means that for this thing, these abbreviations, okay, simply means that for every €1, okay, for €1, the price, the current price of dollar is 1265. It's just like, let me give you a very local example so you can better understand this. You know, today now we have $1 to Nigeria currency is I think the current market rate is 745. Okay, so we're saying that you would need 745 naira to be able to get $1. Okay, so you would need 0.1265, okay, 1265 to be able to get what? €1. All right, so now where you always calculate your pips, you should always pay attention to the fourth number, this fourth number. Okay, that is where your calculation of pips should always come from. So in this instance, let's say you enter the market at 265, okay, and now price now moved up like 1.1269. So in this instance, we now will be subtracting this guy from this guy. So we'll be paying attention to this to these last two numbers. Okay. In this case, we have 9, and then we have 5 here. We have 5 here. Okay. So now if you say 9 minus 5 will give us 4 pip. Okay, 4 pip. So that is how to calculate your pip. Okay, except on currency like JPY. Okay, let's say USD, okay, slash JPY, that's Japanese yen. They come in 2 decimal places. Okay, like you see something like 1.013. Okay, so where you should pay attention to is what is this number in the middle. So let's assume that, let me see how I can clear these guys. Okay, all right, so let's say you want to trade USD JPY. Okay, you want to trade USD JPY. And now you see something like 1 point, let's say 314, for instance. Okay, so this is USD, okay, slash JPY, Japanese yen, JPY. So let's now say when you enter the market, this was the price you saw. After doing your analysis, now you now decide to sell. Okay, you decide to sell, and then say you now sold. Price now moved in your favor. Okay, now we now have 1.252. Okay, so the pip difference will now be from here. You subtract this number, this guy from this guy. Okay, sorry. Yeah, you subtract this guy from this guy. So you'll be paying attention to the values. You know, remember I said you always look at this instance. Okay, but this instant, the price has what? The price has dropped. Okay, but really, you always see something like maybe like 1.352. So if you subtract this guy from this guy, we'll be having like 4. Just do the calculation. 52 minus 14. That's about 46 or thereabouts. Am I correct? 2 off and from 50. Yes, 46. So we're having 46 pips. Okay, don't worry. By the time we go into our trading hub, that's our charting hub, the chart will be using the hub will be using to analyze and then take our trades. I will show you a better way to a faster and better way to calculate these pips instead of going through all of this calculation. But the essence of this is just for you to be able to differentiate base currency from currency codes and how to calculate your pip. Remember, knowing how to calculate your pip is actually very important because that will give you a projection of what profits you will be taking out of the market at that point in time. Okay. Now, so the next thing we want to look at is the spread. These things are small, simpler in explanation, but they are very, very important. You need to know them because if you know them, it will help you, to be very, very swift and very fast in, assessing the market, calculating everything, and then you take actions quickly. Now, what is spread? Spread is just very, very simple. The simple explanation of first is just the difference between the bid price and the ask price. And what's the bid price? Now, the bid price is always referred to as what? The base currency, like, and the currency that's available, like the buy price that is available and the sell price. Okay. Now, what buyers are quoting? Buyers are quoting this price. They're quoting. This is the price buyers are quoting. So bid means buy. In other words, okay. Bid means buy. In other words, why ask means sell. In other words, so anywhere you see bid or ask, you should know that it's buy and sell. So the difference between this buy and sell at the particular time, okay, that you enter the market is called spread. The spread, and this is what your broker, any broker you signed up with, charges to you. Okay, so maybe like you enter the market now. Let's say this is GBP. Remember, I said GBP is a what? Is a major pair. So it's always it's always the base currency, and then every other currency comes as good currency because they have a stronger economy and they have a strong currency. Okay, now look at it. Look at this instance here. Look at GBP and then look at USD. Now, as at the time, let's say the time is 9:30 now. Okay, 9:30. I just entered the chart. I want to see what's going on. So within the time that I entered that chart, and I was looking, I was analyzing. I want to take a trade. Okay, so the difference between this buy here, and this guy here at that time is 2 pip. Okay, if you subtract this guy from this guy, remember I said you should always pay attention to the last number. So if you remove 89 from 91, you have 2. So if supposing I decide to take my trade, either buy or sell, my broker will first charge me 2 pips. Okay, this will be their commission. That's spread. Okay, so by the time we talk more on brokers and the choice of brokers we should be looking at, you would really get to understand what the spread is, because this spread is what we actually use to actually differentiate the services of several brokers, because we want to look at the spread that they charge us and how swift their response is as to withdrawing and how safe the money is with them. So these are the criteria we look at, because spread is actually very important, because by the time you begin to use big money to trade now, it will mean that you'll be charging a very, very, very huge or enormous spread, which is really not healthy. So as time goes by, as we progress with the class, we'll get to acquainted more with these things. Now, the next thing we're looking at, I hope you have your pen and your biro. Though I know this video will be available to you, you can go and watch it over and over time. So we want to look at lot size. Lot size is very, 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 in fact, very important. I need you to pay very, very rapt attention to what I'm explaining now. Okay, it's very important. Now, lot size. Your lot size determines how much and how fast, okay, how much money you make in the market and how fast you can actually make money in the market. Okay, how much money you make in market and how fast you can make money in market is determined by the lot size that you use. What is lot size? A lot is a unit measuring transaction amount. Now, what do I mean by that? Let us leave this grammar and let's come back to a more local explanation. Now, lot size are just volume. Okay, volume. Now, what we mean when we say volume? What do we mean? We mean by, we're talking about the will I use this word like if, for instance, I quickly want to make money. Okay, so the volume I'm able to access at that point in time will determine how much I can make and how quick I can actually make that money. Now, so we have different lot sizes. Okay, so let's just look at the different lot sizes we have first. Look at the figures, and then we'll come back to the explanation so that it will make sense to us. Now we have standard lot size, we have mini lot size, we have micro. Forget about this nano. Nobody uses this now anymore because it's very, very ridiculous by the time I begin to explain it. So let's start from this micro lot size. Now, what lot size means is that for every, let's take, for instance, let's come back here. Let's look at this figure. Let's take this GBP, okay, GBP / USD. Okay, so let's take this figure. Let's take 1.3089 / 1.3091. Sorry, I'm not a good writer, and I'm actually using my laptop to do the work. Okay, so let's look at this figure. Now, so let's come back to the lot size explanation, bearing this figure in mind. Okay, now remember that we are always chasing pips. The number of pips we are able to make will determine how much we take off from the market. So let's say as a trader, you want to discipline yourself to just, seeing if you can secure 20 pips every day that you are in the market. 20 pips every day you are in the market. Okay, so let's assume today we have gotten our 20 pips. So now let's see how these 20 pips can now translate into the dollars. Okay, remember we say pips is the percentage increase in price. Okay, so let's see how we can translate these 20 pips in dollars and see how much we can make out of that 20 pips. We have met our target for 20 pips. Now let's now come to how lot size can actually play a major role as to how much we can take home. Now we have different types of lot sizes that are available, and I told you lot size is volume. So we're talking about different volumes that we have, and depending on which of the volume that you use will determine how much you're making. Now, for every micro lot, we have 1,000 units. Okay, and on your MT4 or MT5 app, your 1,000 units always comes in form of what? Always comes in form of 0.01, 0.01 represents 1,000 units. So you get the explanation now. Just go along with me. Okay. So and for every 0.01, you are entitled to have what? 0.10, that's 10 cents. Okay. So we are saying that for every 0.01, you're using 10 cents. And what do I mean? If you are in a market, you decide to you want to be a conservative trader. You now said, okay, you don't want to risk much. You decide to go by this micro lot, this 1,000, then you're using 0.01. It simply means that you have decided to use 0.01, which is, in other words, you're using 10 cents. You are saying that if price move in my favor for 20 pips, okay, 20 pips, then because I have used my lot sizes of 0.01, I'll be multiplying 20 pips, okay, that price has moved in my favor for, with what? Times 0.1, that's 10 cents, okay, 10 cents, which means that for that day, I'll be going on with what? I'll be going on with 20 cents, okay? But if I decide to take a little bit risk and I use 0.1, you know, they say the more the risk, the higher the risk, the more money you make, and as well the losses you can incur if price goes against you. So let's assume that I have decided to use 0.1. So in the market, for every 0.1, you are buying 10,000 units. And what's the 10,000 units? Now you are saying that for every 0.1, you want to buy 10,000 units of GBP USD. Remember that GBP is what? Is the quote currency. Sorry, is the base currency, while USD is the quote currency. Okay. Now you are buying or selling the quote currency to earn the base currency. So you are saying that for every 0.1, you are buying 10,000 units worth of GBP USD. Okay. So in this sense, you're taking more risk. Now, for every 0.1, you're earning $1. For every 0.1 is $1. So if price moved in your favor for 20 pips, you just simply say 20 pips times what? Times $1, which is what? Which is $20. Okay, which is $20. I hope you guys understand what I'm trying to explain. Please, if you understand, I want you guys to send a chat. Just tell me yes, you understand. Tell me yes, you guys are following. Just type yes in the chat box if you understand what I'm trying to explain. All right, thank you so much. I need more responses from people. If you understand, yes. Okay, thank you very much. All right. So now what I'm saying now, so the higher the risks, the more the reward. And of course, the more the losses. Okay.
Please,
so now,
someone said no. Someone said no. I don't know if you can.
Someone said no. Okay, if you say no, someone said there's a mistake in the first calculation. There's a mistake. So
25.
Okay. Sorry, you know, I am not using my calculator, but of course, thank God you understand what I'm trying to do. It's just, you know, pumping out. Okay, let's do something here. I think I have a calculator on my screen here. Okay, thank you, Honorable Smith, for that insight. Okay, let's go back to the first calculation. Like I said, like for every 0.01, okay, you're going to earn what? 10 cents. That's 0.10. So if price has moved in your favor for 20 pips, okay, you just simply say 20 times 0.01.
We're not saying.
I'm correct. That's $2. That's 2 cents, not even $2. I was correct. Honorable Speed. It is not $2. It is $0.2. Yeah, it's 0.2 cents. So you can see what the calculator did on my screen. So I'm actually correct. Okay, I'm correct. So my head too, na calculator. All right. So now we move on to what? Mini lot size. So you are saying if you're going to be using 0.1. You want to make more money. You're targeting 20 pips, and you want to make more money. So you'll be using 0.1. You decide to use 0.1. So you're saying that for every 1 pip, price moves in your favor for $1. Okay, 0.1 would represent $1. So by the time you multiply 20 times 1, you are already making $20. And the same goes for a standard lot size. Okay, you're saying for every volume, for every 1 standard lot, price moves in your favor in $10. Okay, so by the time you multiply 20, if your target is 20 pips, by the time you multiply 20 times 10, my guy, you're already making $200. You see, so it depends on your risk appetite, what you're willing, to risk. Do you understand what you're willing to risk? You type 20 times 0. Okay, all right. Okay, thank you for the observation. Thank you so much, Honorable Smith. Thank you. Yeah, I think it was my bad there. Somebody said I should do that calculation where, okay, let's go again. I love this class. It simply means that people are actually paying rapt attention. All right, so let's do the calculation again. Now let's come back to 0.01. Okay, for every 0.01, then price moves in our favor in 10 cents, right? That's 0.10. Okay, now, so let's say we targeted 20 pips. Let's say we targeted 20 pips. Now we're now saying 20 pips multiplied by the number of lot size that we use. Okay, it will now be 20 pips multiplied by what? Multiplied by 0.01. It's 0.2 now, my guys. Okay, so let's say 20 pips multiplied by 0.1. Okay, so all right, okay, I get. Yeah, you guys are right. We're saying for every 0.01, we are matching away with 10 cents. So it will just be $20. Okay, I said $20, 20 pips times 0.1, which is $2. Yes, Honorable Smith, you won. Mr. David, you guys won. Thanks for that correction. And for every 0.1, we have $1, which is $20. And for every 1,000, for every standard lot size, we have 100,000 units. So we have $1. Okay, we have 1 lot size, which gives us 10 pip, $10. So by the time you multiply 200 by $10, we have $200. So depending on your risk appetite. So now there's something I would want to say. All of these would depends on your what? On your balance in your wallet, okay? And that would mean that if the balance you have in your wallet can accommodate these lot sizes that we'll be using. So that will now take us to the next class, which will be what? Which will be leverage. Okay, which will now be leverage. Okay, I'm supposed to multiply by the pip. These guys are just attacking me, and this is really good. I love this. Now remember I said that your risk appetite would determine what's your balance, what the balance you have in your wallet. There are some balances you have in your wallet that would not be able to accommodate this mini lot size, the 0.1. Okay, which it will now mean that you can only use 0.01. Okay, and of course there are some certain balance you would have in your wallet that you will not be able to accommodate 1 lot size. You will only be restricted to what? 0.1. So then this will take us to what? To leverage. And what is leverage? Leverage is having the ability to control a large amount of money using no or very little of your own money and borrowing the rest. Now this is where your broker comes in. Your broker knows that Forex exchange market belongs to the big boys. And these people have large chunk of money. They have this money to actually trade the financial market. And you and I, being the retailers, we don't have much of this money. And we want to trade, we want to take part, want to take part of the bread that this market is bringing to the table. So that is when your broker now comes in. Okay, your broker now say, okay, we as your broker, we would give you the access. Sorry, let me expand this. We will give you access to the financial market. Okay, we'll give you access to the financial, but there will be what? There will be terms and conditions. There will be prerequisite. And what is the prerequisite? Now, the prerequisite would mean that we'll be giving you. Sorry, let me just clean this off a little bit so we can do some quick demonstration. Sorry about that. All right, so this is enough. So your broker now said, okay, we know that you don't have these huge amounts of money. Okay, we know that you don't have these huge amounts of money to trade the market. We want to come in for you, but we are going to give you our prerequisite. So if you meet the prerequisite, then you will be able to have access to this financial market. So your broker is not saying that. So your broker is not saying that for you to be able to access 100,000. Remember, we say we have the standard. We have the standard lot size, okay, which is 100,000 units. Okay, remember, okay, and then we have the macro, and then we have the micro. It's here. We have the standard lot size, we have the mini, and then the macro. Okay. Now, your broker is not saying that we are going to give you the power to be able to trade this market, but you have to actually give us a more like let me use the word I would or we are all actually used to, a collateral. Okay, we know that you don't have $100,000. You don't have 100,000. Okay, but we can actually give you the access. But you should be willing to be able to give us 10% of this 100,000, okay, units to be able to access the standard size. Do you understand what I'm saying? Your broker is saying, since you don't have up to $100,000 to fund your account with, so that you can have access to this, be able to take this risk appetite, having access to this one standard lot size, okay, and then making huge profit from the market. We are saying you should be able to provide us 10% of this. And if you do 10% of 100,000, okay, if you do 10% of 100,000, it's just 100,000 times 10, then you divide it by what? By 100. So if you do your calculation, okay, then you will now be parting away with what? $1,000. Okay, so we have $1,000. So you should be able to fund your account with $1,000 if you want to access 100,000 units. So that is leverage. Okay, you don't have huge, but you're trying to leverage on the services of some guys who call themselves brokers, who's got the money, okay, to support you. But they are saying that for you to qualify, you need to be able to bring 10% of that particular amount you're willing to trade. And in this instance, you want to trade the 100,000 standard lot size. And they say, okay, give us 10%, which is $1,000. Okay, a fraction. Am I correct? Yes, a fraction. 10% is classic. That's about $10,000. Okay. Sorry, I'm saying 10%. 1%. Okay, 1%, because 10% of $100,000 is $10,000. 1%. Give us 1% of this standard lot size, standard units. Okay, 100,000 standard units. Then we'll give you access to it. Okay, so let's say you don't want to go for this. Let's say this is too ridiculous. You don't want to take that high risk. You want to come for this mini lot size. Okay, it's just very simple. For every 10,000 units, okay, you should be able to give us 1%. And what's 1% of this guy? That's $100. Okay, by the time you kick this guy off, that's $100. Okay, $100. Okay, so this is how leverage works. So now let's now come here. Remember I said using these functions, we determined your account size. So for me now, let's say my capacity is just being able to have $100. Okay, which means if I have $100, I'll be able to access this guy here. Okay, I'll be able to access I'll be able to access I don't know why this guy is not going off. So I'll be able to access 10,000 units, okay, mini lots. And what does that mean? It means that if I want to enter a trade, let's say I want to enter Euro USD, okay. Mind you, we'll be looking at a real scenario as the class was just for you to get the basic explanation, you know, and so you can always have it in mind when you're about to take a trade. So let's say we want to take a trade. Let me clean this guy. Okay, so let's say quickly we want to look at Euro USD. Okay, Euro USD, and you have $100 as a funded amount equity in your wallet. It means that you can actually take a trade, okay, using 0.1 lot size. Okay, it means that this your account size can actually carry this guy, but you cannot use this $100 for this one lot size. You will not be allowed because of what? Leverage. Okay, because your broker requires that you're able to provide 1% of any of these, okay, if you want to be able to feature or use this feature. Do you get? So this is about leverage, which is actually very important. So anytime you are prepared or you're ready to go into the financial market, then you can have this in mind. Okay, for me to be able to access this one lot, I should be able to at least have $1,000 funded in my account. Or for me to be able to attend this, to use this, I should have $100 in my account. So this is what the advantage or the usefulness of brokers and what they stand in, for us, and what we also stand to benefit, when we take advantage of this leverage. Okay. So that is that about leverage. Okay. So this is going to be where we would kick off. This is where we're going to turn off the meeting for tonight. At this juncture, we'll entertain questions, and then it's supposed to be 10. It's not supposed to be 10,000. Sorry, it's supposed to be 1,000. Ola, yes, Smith, it should be 1,000, not 10,000, sir. 1% of 100,000 units is 1,000. Okay. By the time we go into using our MT4 interface, you better understand what we are talking about here. All right. So, all right. Thank you everyone for tonight's class, for the opportunity you've given me to be able to come here to explain this to you guys. So I'll be in for questions. You can ask your questions and okay. Thank you. All right. So any questions coming from the explanation so far from tonight's class? So let's quickly trash it, and then we move on to the next agenda.
Thank you, Newton, for this amazing presentation. We appreciate you for the value shared. So quickly, if you have any question, could you please raise up your hands? If you have any question, raise up your hands. I mean, this value that we are getting, trust me, if you go outside, you might not even get it for free. So if you have any question, it's gradually we're going to be familiar and understand all of this. So these are things you need to understand before you go into forex market. It is important that some of these things are made known to also, that when you are trading, you don't get confused or you don't get lost for some of these terminologies that they use in forex trading. So if you have any question, please kindly raise up your hand. Otherwise, we will be bringing the meeting to an end until our next class.
So, thank you very much. This is your English, so thank you so much.
So it seems that the teacher did a wonderful job, that we don't have any question. So we couldn't finish up with our topic for the day. So we're supposed to have margin and equity. So by next week, we will be combining it with our other topic, and we would let us know what we'll be covering for next week class. So without wasting much of our time, I want to thank everyone who made it possible for today's Zoom. Thank you everyone for staying true with us. And if you are new here, I want to encourage you to always make it to be part of our class, both crypto and forex class, so that you will be able to help yourself and make a trade. So we will continue our class next week, Thursday, or next week, Friday, and our crypto class holds on Sunday too. So do well to be part of our community lectures. So I wish us a beautiful weekend. Thank you once again, Newton, for this amazing lecture. And I want to say we appreciate you a lot. And thank you, Emmanuel, for also supporting us earlier before Newton joined. So everyone, let us say good night now. Thank you.